Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, November 7th, 2024. Let's take a look at the charts. I am going to start with this one. This is the weekly chart. We gapped above that 278.55 level on Wednesday morning, of course. And I know that we didn't have higher price points. Regrets on that. But if you've been following the video analysis on a day-to-day basis, you know that we're now anticipating the 336.28 formation. That is our next objective. I've been making that pretty clear, I think, for the last, few weeks since we formed that 278.55 formation about 3 weeks ago. So we are above it now. And on the daily chart, it comes in at 279.92, the same exact formation. So this is our base of support, 279.92. You look here far right. That is the daily chart. 78.55 is the weekly chart. And 75.62 is nothing more than Wednesday's low. In other words, were we to fall back and close below this formation, I would also see us want to close below yesterday's low of 275.62 to clearly shift momentum back into the bearish column, at least near term. But we're not there right now. And where we are is anticipating this 319.11 channel top that is, a 6-month channel top or so. I'm going to say over the next 2 to 3 weeks with present volatility. I think next 2 to 3 weeks. And as I've been saying, over the next couple of months, the 337.08 channel top on the daily chart. Once again, on the weekly chart, that comes in at 336.28. So that is the upside big picture in a nutshell. No good reason to be short Tesla if you are. You want to be long Tesla. You can anticipate what is a narrowing zone of long-term resistance between 319.11 and 337.08. They all converge in December over the next couple of months, quite possibly by the end of the year. And you can see the formation here that we settled above yesterday. That is kind of the near-term scope, 279.92. And in fact, working up now today, I do have 299.29 is the July high. Can I find that on a chart somewhere? Yes, here we are. So 299.29, I have that as a minor point only, and I'll tell you why, because there's this newly formed, steeply rising channel top that is just above it. So we're allowing slippage through that 299.29 July high. We might actually see this today, 300.30. I'm going to call this under most circumstances, under most volatility like we've seen up until yesterday, I would call this kind of a 1-week target over the next 3 to 5 days. But we could see this today. We do have yesterday's high of 289.59, but you'll see I have 289.52, and that is nothing more than the low of the high going all the way back to July. So we have we've got the January 23 low, we have the July 23 high. We have yet to retest that July 23 high. I think we'll probably see it today. And in fact, on the way up, the low of that high, we don't have it marked, but it did essentially contain yesterday's highs. The high yesterday was 289.59. The low of that high, which we use a lot in bar chart analysis, 289.52. This is a long way for me to tell you that 289.52 is kind of a soft pivot point today, below which we can ease back to 279.92, where a buy opportunity presents not only for the day, not only for the next 3 to 5 days up to 300.30, but as I said earlier, over the next couple of months up to 337.08. All right. So that is a big area, the 279.92 area. And if we happen to push through 289.52, if you want to hold out for yesterday's high, pushing above 289.59, I don't have a problem with that. I think either one will suffice in terms of anticipating 300.30 on an intraday basis where a daily high can be placed. We may come off of this for several days back into the upper 270s again. So if there is a 3 to 5 day swing trade opportunity on the chart right now, given the fact that it's incredibly bullish, I'm going to say, obviously, exhibit pretty decent risk management, pretty conservative. You don't want to see the market push through 300.30 by a wide margin, then we can run significantly. Let me just say that if we were to close above 300.30, then we should within, that's roughly the same as this 299.29. So if we were to close above this area by the end of next week, if we close above 300.30, this 319.11 formation, 318.93 in the weekly chart, likely then by the the end of next week. And at that point in time, we'd be entering this zone. So this could materialize much faster than the 1 to 2 months I'm saying right now. Holding above 279.92 and closing then above 300.30, we could by the end of next week reach 319.11, which is at this point in time, you can say the beginning of a wide zone of targeted long-term resistance up to 337.08 that may well contain buying through the first quarter of next year. Let's cover the downside a little bit. Of course, we've got 279.92, and on the weekly chart, that is 278.55. That is your range of support, and that is buyable support. That is an area that can absorb selling through the rest of the year, actually. Now, if we happen to break 279.92, the low from yesterday, 275.62, is likely, and that is our downward pivot point, not only through the rest of the week, but over the next couple of weeks. If we close today below 275.62, and you went long yesterday, I hate to break it to you, but you'll need to reverse and you'll at least need to get out of your long position, unless you want to ride this market all the way back into the upper 230s to mid 240s within 1 to 2 weeks. This could be pretty abrupt. So if we close below 275.62, I see no good reason to stay long Tesla as we move through next week. I would then expect this 237.35 to 45.76 area within, this could be a 1 full week of activity. It could take the better part of 2 weeks depending on volatility. We could bottom out here on a weekly basis, possibly through the balance of November. And there is a case to be made, I must say. This is a longer-term 3-month channel top. And if we close back below 279.92 as well as 275.62, once again, you should allow for 222.19. Is it clearly indicated? No, but it is actionable. If we close back below the 275.62 to 279.92 region, I do think you can set a short. That might mean reaching for a 225 strike out of the money put that doesn't expire for at least a couple of months. This is probably a 3 to 5 week, 1 month play to the downside with a meaningful support in the upper 230s, the mid 240s, able to contain selling pressures on a weekly basis on the way down, and we could rotate up from there. And we'll be sort of nuancing this and dissecting it in the days and weeks ahead if we close below 275.22. But until then, I'm going to leave you, with this image. This is the daily chart above 279.92. No good reason to be short Tesla. I'm expecting the 300.30 area this week. I'm expecting this narrowing zone of long-term resistance between 319.11 and 337.08 by the end of the year, and it could be much sooner, as I articulated just a moment ago. I think that's about it. I'm gonna call it a day. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla. You have a great evening.